Question 1. A person used to obtain a loan for another individual is option A, investor, option B, underwriter, option C, a co-signer, option D, a straw buyer. Take a moment to choose your answer. The correct answer is option D, straw buyer. Explanation. P greater than a straw buyer misrepresents the true borrower. P. Question 2. A completely fabricated mortgage file is called option A, a wire fraud, option B, air loan, option C, straw purchase, option D, equity skimming. Take a moment to choose your answer. The correct answer is option B, air loan. Explanation. P, an air loan has no real borrower or property. P. Question 3. Falsely claiming a property is owner-occupied is option A, occupancy fraud, option B, a red flag, option C, income fraud, option D, equity fraud. Take a moment to choose your answer. The correct answer is option A, occupancy fraud. Explanation. P, misrepresentation of occupancy is fraud. P. Question 4. Collecting rent while not paying the mortgage is option A, equity skimming, option B, air loan, option C, OPMI fraud, option D, are straw buying. Take a moment to choose your answer. The correct answer is option A, equity skimming. Explanation. P, equity skimming involves rental income misuse. P. Question 5. Inflating property value to qualify borrower is option A, appraisal fraud, option B, a red flag, option C, a wire fraud, option D, loan modification. Take a moment to choose your answer. The correct answer is option A, appraisal fraud. Explanation. P, inflated appraisals are mortgage fraud. P. Question 6. Claiming a property will be owner-occupied when it will be rented is option A, occupancy fraud, option B, appraisal fraud, option C, equity fraud, option D, short sale fraud. Take a moment to choose your answer. The correct answer is option A, occupancy fraud. Explanation. P, misrepresenting occupancy to obtain better loan terms is occupancy fraud. P. Question 7. A loan file submitted for funding with no real borrower or property is called option A, air loan, option B, equity skimming, option C, straw purchase, option D, wire fraud. Take a moment to choose your answer. The correct answer is option A, air loan. Explanation. P, an air loan is completely fictitious. P. Question 8. Collecting rent while intentionally not paying the mortgage is option A, fraud alert, option B, equity skimming, option C, TLTV fraud, option D, air loan. Take a moment to choose your answer. The correct answer is option B, equity skimming. Explanation. P, equity skimming involves taking rental income and not paying the mortgage. P. Question 9. Intentionally inflating property value to qualify a borrower is option A, appraisal fraud, option B, equity skimming, option C, a red flag, option D, our straw buying. Take a moment to choose your answer. The correct answer is option A, appraisal fraud explanation. P. Inflating value to influence approval is appraisal fraud. P. Question 10. Falsifying pay stubs to qualify for a mortgage is option A, a wire fraud, option B, the red flag, option C, income fraud, option D, active duty fraud. Take a moment to choose your answer. The correct answer is option C, income fraud explanation. P. Providing false income documentation is mortgage fraud. P. Question 11. A person used to obtain a loan for someone else who cannot qualify is called option A, a broker, option B, straw buyer, option C, investor, option D, cosigner. Take a moment to choose your answer. The correct answer is option B, straw buyer explanation. P greater than a straw buyer misrepresents who the true borrower is. P. Question 12. A SAR filing must remain, option A, disclosed to borrower, option B, a public record, option C, sent to appraiser, option D, confidential. Take a moment to choose your answer. The correct answer is option D, confidential explanation. P. SAR filings are confidential and cannot be disclosed to the borrower. P. Question 13. A suspicious activity report must be filed when, option A, PMI exceeds 80%, option B, every application is denied, option C, borrower dispute score, option D, fraud meets reporting thresholds. Take a moment to choose your answer. The correct answer is option D, fraud meets reporting thresholds explanation. PSARs are filed when suspicious activity meets regulatory requirements. P. Question 14. Email interception redirecting closing funds to a criminal account is option A, appraisal fraud, option B, occupancy fraud, option C, straw buying, option D, wire fraud. Take a moment to choose your answer. The correct answer is option D, wire fraud explanation. P. A wire fraud commonly occurs during real estate closings. P. Question 15. A SAR must be filed when, option A, any loan is denied, option B, PMI is required, option C, a borrower disputes appraisal, option D, fraud is suspected above reporting thresholds. Take a moment to choose your answer. The correct answer is option D, fraud is suspected above reporting thresholds explanation. P. Financial institutions must file SARs when suspicious activity meets regulatory thresholds. P. Question 16. Failure to file a required SAR may result in option A, PMI waiver, option B, automatic foreclosure, option C, higher interest rates, option D, regulatory penalties. Take a moment to choose your answer. The correct answer is option D, regulatory penalties explanation. P. Failure to comply with SAR requirements may result in fines and penalties. P. Question 17. Predatory lending generally refers to option A, unfair or abusive loan practices targeting borrowers, option B, ethical underwriting, option C, government-backed loans, option D, secondary market trading. Take a moment to choose your answer. The correct answer is option A, unfair or abusive loan practices targeting borrowers. Explanation. P. Predatory lending includes abusive, deceptive, or unfair loan practices. P. Question 18. Targeting elderly homeowners for high-fee refinances is option A, predatory lending, option B, standard underwriting, option C, collateral management, option D, ethical marketing. Take a moment to choose your answer. The correct answer is option A, predatory lending. Explanation. P. Targeting vulnerable groups with harmful loan terms is predatory lending. P. Question 19. Directing a qualified borrower into a higher cost loan for compensation is option A, collateralization, option B, legal advising, option C, steering, option D, redlining. Take a moment to choose your answer. The correct answer is option C, steering. Explanation. P. Steering is a predatory practice that harms borrowers for lender benefit. P. Question 20. A warning placed on a credit file requiring lenders to verify identity is called option A, active duty alert, option B, a red flag, option C, SAR, option D, fraud alert. Take a moment to choose your answer. The correct answer is option D, fraud alert. Explanation. P. Greater than a fraud alert requires creditors to take extra steps to confirm identity before granting credit. P. Question 1. A basic fraud alert generally lasts, option A, 1 year, option B, 90 days, option C, 30 days, option D, 7 years. Take a moment to choose your answer. The correct answer is option B, 90 days. Explanation. P. An initial fraud alert typically lasts 90 days. P. Question 2. Which alert is available to deployed military personnel? Option A, fraud alert, option B, active duty alert, option C, a red flag, option D, identity theft alert. Take a moment to choose your answer. The correct answer is option B, active duty alert. Explanation. P. Active duty alerts protect deployed service members from identity theft. P. Question 3. An extended identity theft alert is placed after option A, a foreclosure, option B, confirmed identity theft, option C, loan denial, option D, a PMI removal. Take a moment to choose your answer. The correct answer is option B, confirmed identity theft. Explanation. P. Extended alerts are used when identity theft has been verified. P. Question 4. The red flags rule requires lenders to option A, create identity theft prevention programs, option B, automatically deny flagged loans, option C, approve military borrowers, option D, file SARs for every alert. Take a moment to choose your answer. The correct answer is option A, create identity theft prevention programs explanation. P. Lenders must implement written programs to detect identity theft. P. Question 5. Fraud alerts are designed to: option A, lower interest rates; option B, eliminate debt; option C, prevent identity theft; option D, reduce PMI. Take a moment to choose your answer. The correct answer is option C, prevent identity theft explanation. P. Fraud alerts help prevent unauthorized credit activity. P. Question 6. An extended identity theft alert generally lasts: option A, 90 days; option B, 30 days; option C, 7 years; option D, 1 year. Take a moment to choose your answer. The correct answer is option C, 7 years explanation. P. Extended alerts may last up to 7 years. P. Question 7. Which is considered a red flag? Option A, adjustable rate loan; option B, minor credit score drop; option C, inconsistent social security number; option D, low down payment. Take a moment to choose your answer. The correct answer is option C, inconsistent social security number explanation. P. Inconsistent SSNs are a strong identity theft red flag. P. Question 8. When a red flag is detected, a lender should: option A, investigate and verify identity; option B, ignore it; option C, proceed without verification; option D, automatically deny loan. Take a moment to choose your answer. The correct answer is option A, investigate and verify identity explanation. P. Lenders must investigate suspicious indicators. P. Question 9. An active duty alert typically lasts: option A, 30 days; option B, 1 year; option C, 90 days; option D, 7 years. Take a moment to choose your answer. The correct answer is option B, 1 year explanation. P. Active duty alerts usually remain in place for 1 year. P. Question 10. A notice placed on a consumer's credit file requiring lenders to verify identity is called: option A, SAR; option B, fraud alert; option C, active duty notice; option D, red flag. Take a moment to choose your answer. The correct answer is option B, fraud alert explanation. P. Greater than a fraud alert requires creditors to take extra steps to confirm identity before extending credit. P. Question 11. Under the red flags rule, lenders must: option A, deny all flagged applications; option B, approve all fraud alerts; option C, develop identity theft prevention programs; option D, file SARs automatically. Take a moment to choose your answer. The correct answer is option C, develop identity theft prevention programs explanation. P. The red flags rule requires lenders to establish written identity theft prevention programs. P. Question 12. Which alert protects deployed military members from identity theft? Option A, fraud alert. Option B, active duty alert. Option C, red flag alert. Option D, identity theft alert. Take a moment to choose your answer. The correct answer is option B, active duty alert explanation. P. Active duty alerts are specifically for deployed service members. P. Question 13. An extended identity theft alert is typically placed after option A, confirmed identity theft. Option B, loan denial. Option C, suspicion only. Option D, foreclosure. Take a moment to choose your answer. The correct answer is option A, confirmed identity theft explanation. P. Extended alerts are used when identity theft has been confirmed. P. Question 14. Intentionally omitting debts on a loan application may constitute option A, minor oversight. Option B, escrow error. Option C, fair housing violation. Option D, mortgage fraud. Take a moment to choose your answer. The correct answer is option D, mortgage fraud explanation. P. Intentional omission of debts is considered fraudulent misrepresentation. P. Question 15. Mortgage fraud penalties are typically more severe when option A, borrower self-reports. Option B, loan involves federal insurance. Option C, loan is conventional. Option D, property is vacant. Take a moment to choose your answer. The correct answer is option B, loan involves federal insurance explanation. P. Fraud involving federally insured loans carries enhanced federal penalties. P. Question 16. A conviction for federal mortgage fraud may result in option A, loss of professional license. Option B, mandatory refinancing. Option C, no professional consequences. Option D, probation only. Take a moment to choose your answer. The correct answer is option A, loss of professional license explanation. P. Mortgage fraud convictions may result in license revocation and permanent record. P. Question 17. Colluding with an appraiser to inflate property value may result in option A, loan modification. Option B, criminal fraud charges. Option C, administrative warning. Option D, LPMI removal. Take a moment to choose your answer. The correct answer is option B, criminal fraud charges explanation. P. Collusion to inflate value is fraud for profit and subject to prosecution. P. Question 18. Submitting knowingly falsified income documents may result in option A, loan denial only. Option B, interest rate increase. Option C, a federal prosecution. Option D, escrow adjustment. Take a moment to choose your answer. The correct answer is option C, a federal prosecution explanation. P. Falsified documents may lead to federal criminal charges. P. Question 19. Fraud involving FHA-insured loans may be prosecuted under option A, state parking laws. Option B, real estate commission policy only. Option C, federal criminal statutes. Option D, HOA regulations. Take a moment to choose your answer. The correct answer is option C, federal criminal statutes explanation. P. FHA loans are federally insured and fraud is subject to federal criminal prosecution. P. Question 20. For mortgage fraud to be criminal, the act must generally involve option A, intentional misrepresentation, option B, clerical error, option C, a negligence, option D, simple mistake. Take a moment to choose your answer. The correct answer is option A, intentional misrepresentation. Explanation. P. Criminal mortgage fraud requires intent to deceive. P. Question 1. Making false statements to a federal lending institution may result in option A, civil penalty only, option B, criminal prosecution, option C, administrative warning, option D, a license suspension only. Take a moment to choose your answer. The correct answer is option B, criminal prosecution. Explanation. P. False statements to federally regulated institutions may result in federal criminal prosecution. P. Question 2. Committing fraud on a federally insured or guaranteed mortgage loan may result in option A, 10 years imprisonment and $100,000 fine, option B, 30 years imprisonment and up to $1 million fine, option C, 1 year imprisonment and $10,000 fine, option D, 5 years imprisonment and $50,000 fine. Take a moment to choose your answer. The correct answer is option B, 30 years imprisonment and up to $1 million fine. Explanation. P. Fraud involving federally insured or guaranteed loans can carry penalties of up to 30 years in prison and fines up to $100,000. P. Question 3. Federal bank fraud carries a maximum penalty of option A, 30 years imprisonment, option B, 5 years imprisonment, option C, 10 years imprisonment, option D, 50 years imprisonment. Take a moment to choose your answer. The correct answer is option A, 30 years imprisonment. Explanation. P. Under federal law, bank fraud can carry up to 30 years imprisonment. P. Question 4. Conspiring with others to commit mortgage fraud, option A, is not punishable if loan is denied, option B, results only in civil penalties, option C, applies only to lenders, option D, is punishable even if fraud is not completed. Take a moment to choose your answer. The correct answer is option D, is punishable even if fraud is not completed. Explanation. P. Conspiracy to commit fraud is prosecutable even if the fraud is not completed. P. Question 5. Equity-based lending most directly conflicts with which rule? Option A, RESPA Section 8, option B, the ability to repay rule, option C, MAP rule, option D, HMDA. Take a moment to choose your answer. The correct answer is option B, the ability to repay rule. Explanation. P. Equity-based lending ignores borrower ability to repay, violating ATR principles. P. Question 6. Approving a loan based primarily on the property value and not the borrower's ability to repay is known as option A, loan flipping, option B, collateralization, option C, equity stripping, option D, equity-based lending. Take a moment to choose your answer. The correct answer is option D, equity-based lending. Explanation. P. Equity-based lending focuses on the property's value rather than the borrower's repayment ability. P. Question 7. A lender states, even if the borrower defaults, we can recover our money because the LTV is low. This describes option A, equity-based lending, option B, loan flipping, option C, redlining, option D, appraisal fraud. Take a moment to choose your answer. The correct answer is option A, equity-based lending. Explanation. P. This reflects approving based on equity cushion rather than repayment ability. P. Question 8. Equity stripping is most commonly classified as option A, a legitimate underwriting, option B, predatory lending practice, option C, secondary market sale, option D, a loan product. Take a moment to choose your answer. The correct answer is option B, predatory lending practice. Explanation. P. Equity stripping is a predatory practice targeting borrower equity. P. Question 9. Repeatedly refinancing a borrower to extract fees and drain equity is called option A, legal refinancing, option B, collateralization, option C, equity stripping, option D, steering. Take a moment to choose your answer. The correct answer is option C, equity stripping. Explanation. P. Equity stripping drains homeowner equity through excessive refinancing and fees. P. Question 10. Equity stripping primarily harms the borrower by option A, increasing property value, option B, reducing interest rates, option C, removing accumulated home equity, option D, lowering taxes. Take a moment to choose your answer. The correct answer is option C, removing accumulated home equity. Explanation. P. The practice drains the homeowner's accumulated equity through fees and refinancing. P. Question 11. Using property as security for a loan is called option A, redlining, option B, loan flipping, option C, a collateralization, option D, equity stripping. Take a moment to choose your answer. The correct answer is option C, collateralization. Explanation. P. Collateralization means securing a loan with property. P. Question 12. Fraud for profit is most often committed by option A, first-time homebuyers, option B, unsophisticated borrowers, option C, industry insiders, option D, servicers. Take a moment to choose your answer. The correct answer is option C, industry insiders. Explanation. Fraud for profit is typically committed by professionals. Question 13. Fraud for property typically involves option A, borrowers overstating income to qualify, option B, servicing errors, option C, the appraisers manipulating values, option D, investors inflating values for profit. Take a moment to choose your answer. The correct answer is option A, borrowers overstating income to qualify. Explanation. Fraud for property usually involves borrowers seeking home ownership. Question 14. Mortgage fraud requires Option A, loan denial. Option B, a negligence. Option C, a poor documentation. Option D, intentional deception. Take a moment to choose your answer. The correct answer is Option D, intentional deception. Explanation. Fraud requires intent, not accidental error. Question 15. Mortgage fraud is best defined as Option A, a market value decline. Option B, any intentional misrepresentation made to obtain a mortgage. Option C, a poor underwriting. Option D, a borrower missing a payment. Take a moment to choose your answer. The correct answer is Option B, any intentional misrepresentation made to obtain a mortgage. Explanation. Mortgage fraud involves intentional deception for financial gain. Question 16. Property flipping fraud often includes Option A, below market sales. Option B, rapid resale at inflated prices. Option C, declining values. Option D, owner-occupied purchases. Take a moment to choose your answer. The correct answer is Option B, rapid resale at inflated prices. Explanation. Fraudulent flips inflate values artificially. Question 17. Which credit behavior is a red flag? Option A, timely payments. Option B, long credit history. Option C, low utilization. Option D, sudden rapid credit improvement. Take a moment to choose your answer. The correct answer is Option D, sudden rapid credit improvement. Explanation. Rapid score changes may indicate manipulation. Question 18. An heir loan is best described as Option A, a loan without collateral. Option B, a completely fictitious loan. Option C, an interest-only loan. Option D, a high LTV loan. Take a moment to choose your answer. The correct answer is Option B, a completely fictitious loan. Explanation. Heir loans are fake loans with no real property. Question 19. Which party is most likely involved in organized mortgage fraud? Option A, county recorder. Option B, home inspector only. Option C, industry professionals. Option D, borrower only. Take a moment to choose your answer. The correct answer is Option C, industry professionals. Explanation. Fraud rings often involve multiple professionals. Question 20. Using another person's identity to obtain a mortgage is Option A, identity theft and mortgage fraud. Option B, underwriting risk. Option C, clerical error. Option D, acceptable with permission. Take a moment to choose your answer. The correct answer is Option A, identity theft and mortgage fraud. Explanation. Identity misuse is criminal fraud. Question 1. Occupancy fraud occurs when a borrower, Option A, rents a room. Option B, refinances. Option C, moves after closing. Option D, misrepresents intended occupancy. Take a moment to choose your answer. The correct answer is Option D, misrepresents intended occupancy. Explanation. Misstating occupancy status is a common fraud. Question 2. Mortgage fraud penalties may include option A, fines, imprisonment, and license revocation, option B, loan denial only, option C, fines only, option D, a license suspension only. Take a moment to choose your answer. The correct answer is option A, fines, imprisonment, and license revocation. Explanation. Fraud carries civil and criminal penalties. Question 3. Which document is commonly falsified in mortgage fraud? Option A, appraisal, option B, all of the above, option C, pay stubs, option D, bank statements. Take a moment to choose your answer. The correct answer is option B, all of the above. Explanation. Multiple documents may be falsified. Question 4. An MLO who suspects fraud must, option A, proceed if borrower insists, option B, ignore the issue, option C, approve the loan, option D, report and stop participation. Take a moment to choose your answer. The correct answer is option D, report and stop participation. Explanation. MLOs must not participate in suspected fraud. Question 5. A straw buyer is someone who, option A, refinances multiple times, option B, buys a second home, option C, uses gift funds, option D, applies on behalf of the true purchaser. Take a moment to choose your answer. The correct answer is option D, applies on behalf of the true purchaser. Explanation. Straw buyers hide the true borrower. Question 6. Which employment scenario is a red flag? Option A, recently created employer with unverifiable income, option B, long-term stable job, option C, government employment, option D, W-2 income. Take a moment to choose your answer. The correct answer is option A, recently created employer with unverifiable income. Explanation. Unverifiable employers are a fraud indicator. Question 7. Which asset situation is suspicious? Option A, large unexplained deposits, option B, payroll deposits, option C, verified gift funds, option D, season savings. Take a moment to choose your answer. The correct answer is option A, large unexplained deposits. Explanation. Unexplained funds may indicate borrowed money. Question 8. Appraisal fraud involves, option A, inflated or manipulated valuations, option B, market decline, option C, underwriting denial, option D, low property value. Take a moment to choose your answer. The correct answer is option A, inflated or manipulated valuations. Explanation. Intentionally misstated values constitute appraisal fraud. Question 9. Which statement may indicate occupancy fraud? Option A, borrower owns multiple nearby investment properties, option B, borrower downsizing, option C, borrower is relocating, option D, borrower plans to live in the home. Take a moment to choose your answer. The correct answer is option A, Borrower owns multiple nearby investment properties. Explanation. Multiple nearby rentals raise occupancy concerns. Question 10. Mortgage fraud laws exist primarily to: Option A. Benefit lenders only. Option B. Limit homeownership. Option C. Increase lending volume. Option D. Protect consumers and the financial system. Take a moment to choose your answer. The correct answer is Option D. Protect consumers and the financial system. Explanation. Fraud prevention protects consumers and markets. Question 11. Which pricing scenario is suspicious? Option A. Competitive bidding. Option B. Price reduction. Option C. Market-based price. Option D. Sales price significantly above comparable properties. Take a moment to choose your answer. The correct answer is Option D. Sales price significantly above comparable properties. Explanation. Inflated prices relative to comps suggest fraud. Question 12. Mortgage fraud is investigated at the federal level primarily by: Option A. HUD only. Option B. IRS. Option C. FBI. Option D. Is state licensing agencies only. Take a moment to choose your answer. The correct answer is Option C. FBI. Explanation. The FBI investigates mortgage fraud. Question 13. The best defense against mortgage fraud is: Option A. Strong verification and compliance procedures. Option B. Faster closings. Option C. Higher interest rates. Option D. Lower documentation. Take a moment to choose your answer. The correct answer is Option A. Strong verification and compliance procedures. Explanation. Proper verification and compliance prevent fraud. Question 14. Stating false income on a loan application is: Option A. Acceptable if undocumented. Option B. Risk layering. Option C. A clerical error. Option D. A mortgage fraud. Take a moment to choose your answer. The correct answer is Option D. A mortgage fraud. Explanation. Knowingly misstating income is fraud. Question 15. Undisclosed seller concessions may indicate: Option A. Lower April. Option B. Proper negotiation. Option C. Loan seasoning. Option D. Potential fraud. Take a moment to choose your answer. The correct answer is Option D. Potential fraud. Explanation. Hidden concessions misstate transaction terms. Question 16. Which sign suggests document alteration? Option A. The original signatures. Option B. Official letterhead. Option C. Whiteout or mismatched formatting. Option D. Consistent fonts. Take a moment to choose your answer. The correct answer is Option C. Whiteout or mismatched formatting. Explanation. Formatting inconsistencies indicate tampering. Question 17. Income that increases sharply right before application is a red flag because: Option A. It guarantees approval. Option B. It improves DTI. Option C. It may be fabricated or temporary. Option D. It reduces risk. Take a moment to choose your answer. The correct answer is option C. It may be fabricated or temporary. Explanation. Sudden income spikes may not be stable or real. Question 18. Why is occupancy misrepresentation considered serious fraud? Option A. It delays closing. Option B. It affects property taxes only. Option C. It impacts loan pricing, risk, and eligibility. Option D. It affects appraisals only. Take a moment to choose your answer. The correct answer is option C. It impacts loan pricing, risk, and eligibility. Explanation. Occupancy affects rates, underwriting standards, and risk. Question 19. Proper record retention helps prevent fraud by option A. Increasing fees. Option B. Speeding closings. Option C. Reducing paperwork. Option D. Providing audit trails. Take a moment to choose your answer. The correct answer is option D. Providing audit trails. Explanation. Records allow verification and audits. Question 20. On the SAFE exam, fraud questions focus most on option A. Marketing strategies. Option B. Loan pricing. Option C. Complex math. Option D. Recognizing red flags and ethical duties. Take a moment to choose your answer. The correct answer is option D. Recognizing red flags and ethical duties. Explanation. The exam emphasizes red flags and MLO responsibility. Question 1. An MLO who knowingly participates in fraud may face option A. No consequences. Option B. Only retraining. Option C. Civil and criminal penalties. Option D. Lower commissions. Take a moment to choose your answer. The correct answer is option C. Civil and criminal penalties. Explanation. Participation exposes MLOs to severe penalties. Question 2. Pressuring an appraiser to meet a target value is option A. A negotiation tactic. Option B. Illegal and unethical. Option C. Standard practice. Option D. Encouraged by lenders. Take a moment to choose your answer. The correct answer is option B. Illegal and unethical. Explanation. Appraiser independence is legally required. Question 3. Mortgage payments made by undisclosed third parties may indicate option A. Straw buyer arrangement. Option B. Gift funds. Option C. Good credit. Option D. Low risk. Take a moment to choose your answer. The correct answer is option A. Straw buyer arrangement. Explanation. Third-party payments may hide the true borrower. Question 4. A silent second mortgage is dangerous because it, option A, reduces interest. Option B, is not disclosed and increases borrower leverage. Option C, lowers LTV. Option D, is always legal. Take a moment to choose your answer. The correct answer is option B. Is not disclosed and increases borrower leverage explanation. Undisclosed debt misrepresents borrower risk. Question 5. Cash back to the borrower at closing on a purchase transaction is, option A, a required, option B, encouraged, option C, often a red flag for fraud, option D. Always permitted. Take a moment to choose your answer. The correct answer is option C, often a red flag for fraud explanation. Cashback may disguise inflated sales prices. Question 6. Kickbacks related to mortgage transactions are prohibited under option A, TILA, option B, RESPA, option C, HMDA, option D, ECOA. Take a moment to choose your answer. The correct answer is option B, RESPA explanation. RESPA prohibits kickbacks and referral fees. Question 7. Collusion occurs when, option A, a borrower makes an error, option B, multiple parties cooperate to commit fraud, option C, the documents are delayed, option D, one party commits fraud alone. Take a moment to choose your answer. The correct answer is option B, multiple parties cooperate to commit fraud explanation. Collusion involves coordinated fraudulent actions. Question 8. The primary goal of mortgage fraud prevention is to, option A, slow lending, option B, eliminate risk entirely, option C, protect consumers, lenders, and the financial system, option D, increase loan volume. Take a moment to choose your answer. The correct answer is option C, protect consumers, lenders, and the financial system explanation. Fraud prevention protects the entire mortgage system. Question 9. Multiple rapid transfers of a property may indicate, option A, a normal market activity, option B, owner occupancy, option C, a property flipping fraud, option D, loan seasoning. Take a moment to choose your answer. The correct answer is option C, property flipping fraud explanation. Rapid transfers often accompany inflated values. Question 10. Which action best helps detect mortgage fraud? Option A, thorough verification of documents, option B, relying on borrower statements only, option C, reducing documentation, option D, speeding approvals. Take a moment to choose your answer. The correct answer is option A, thorough verification of documents explanation. Verification is the strongest fraud deterrent. Question 11. An unlicensed person performing MLO activities is, option A, permitted under supervision, option B, allowed for family, option C, a serious regulatory violation, option D, acceptable temporarily. Take a moment to choose your answer. The correct answer is option C, a serious regulatory violation explanation. MLO activities require proper licensing. Question 12. Suspected mortgage fraud should be reported to, option A, no one, option B, only after closing, option C, The borrower only. Option D. Appropriate supervisors or authorities. Take a moment to choose your answer. The correct answer is option D. Appropriate supervisors or authorities. Explanation. Fraud must be escalated and reported. Question 13. Failing to disclose liabilities primarily affects option A. DTI and repayment ability, option B. Loan term, option C. Property value, option D. LTV. Take a moment to choose your answer. The correct answer is option A. DTI and repayment ability. Explanation. Hidden debts distort borrower qualification. Question 14. Ethical lending requires MLOs to option A. Ignore red flags, option B. Maximize commissions, option C. Avoid documentation, option D. Act in the borrower's and public's interest. Take a moment to choose your answer. The correct answer is option D. Act in the borrower's and public's interest. Explanation. Ethics demand integrity and consumer protection.